Markets shaky with Trump's tariffs and recession talk? Panic selling? Not so fast. Smart investors see opportunity. Let's explore why now could be a time to buy stocks, especially the S&P 500, while staying safe. Welcome to Money Matters. I'm John, and my goal is to empower you with financial knowledge. Introduction. Trump's tariffs are causing market jitters, adding to recession worries for 2025. Many are hitting the panic button. But history shows downturns can be prime times for long-term gains if approached wisely. Part 1. Why consider the S&P 500 now? It's 500 top US companies, often resilient. Market drops mean better valuations, buying quality at a discount. Historically, the S&P 500 rebounds strong. Crucial, be cautious. Tariffs and recession are real risks. Use dollar-cost averaging. Small, regular investments. Start small, be patient. Disclaimer: not financial advice. All investing is risky. Do your own research. Part 2. To navigate a potential recession, consider sectors that hold up well. Consumer staples, XLP. Essentials people always need. Healthcare, 45. Constant demand. Utilities, XLU. Necessities with stable demand. Discount retailers, WMT, COST. Thrive when budgets tighten. Select tech, stable companies with recurring revenue. Low volatility ETFs, SPLV. Designed for stability. Remember, even these have risks. Diversify and research thoroughly. Long-term view and conclusion. Investing in uncertainty needs a long-term view and patience. Don't chase short-term gains. Build a diverse portfolio of quality assets and hold through market cycles. Historically, staying invested pays off. Navigate 2025 strategically. Consider the S&P 500 cautiously with dollar-cost averaging and explore recession-resistant options. Be informed, be strategic, and aim to thrive. Subscribe for more insights. Want to make money while you sleep? Click the card on the top right to learn how. Don't miss out on this chance to learn the secret to financial freedom. Thanks for watching.